Here we have the 15-minute price chart for AMC Entertainment Holdings Incorporated, stock ticker AMC. Okay, so here we can see that to close the prior trading session, we were trading under a bit of selling pressure here. We did see some shorter term declines. This does follow a prior rally, a fairly strong price rally. So, to some extent, you would expect to see some corrective pullbacks to the downside. You can't just really expect to see prices move in one direction constantly, consistently, without some sort of corrective retracement. So that's really what I'm viewing this price level here as being. We've got this shorter trend here following this broader trend, which would be this here. So, just looking at the length of the lines themselves, we can see that, overall the upside far outweighs the downside here. And then in addition to that, I think we've got some fairly critical support levels coming up that would be likely to contain prices to the downside. So in other words, kind of slow the selling pressure and support prices and prevent them from falling further. So specifically, what I would be looking at here would be this double top resistance zone that came in. It started to form June 27th with highs of 490. And then this level was retested again on June 28th with highs of 488. So it's not exact, but we're talking 2 cents here. I mean, this is for the market, for all intents and purposes here, as far as the market is concerned. Those are very close levels. So I would characterize this as a double top resistance zone. And it was significant in the market because, as we can see, it took a lot for the market to move through here. That would be this kind of upside break here. So it took some forceful moves to the top side in order to push through this area. So after you see a resistance zone like this, what you would really expect to occur in the future would be for that same price level to now work as support. Because, essentially, there were sell orders that were parked here. And then once prices forced through the top side, those sell orders have to close. People close out their positions, and then those orders now have the opposite market effect. It really has the same effect as a buy order. So this is the reason that, if we see a prior resistance zone, it is expected to work as support in the future. So if we kind of extend that line out here and kind of look at that price zone, in a more current context, there are some additional reasons to point to this level because, as you can see, this blue line here is coming into very close contact with that resistance turned support zone. So this blue line here is the 200 period exponential moving average. It's a longer term moving average, which means that it tends to be more powerful than a shorter term moving average. And we're coming into very close contact with this historical price region. So overall, I would expect this level to be significant here and to work, in favor of the stock, unless we see a downside break. If we did see a downside break, that would be a more bearish event, and we would expect to see prices move lower. But as long as this level holds, and the balance of the evidence does suggest that it will hold, we would expect to see moves higher and a retest of the prior highs and most likely a break of those highs. So these are kind of the two scenarios here that could be seen. But in my view, the real important level to watch here does come in at this 490 level. And this is not the first time we've seen this level. This is not the first time we've spoken about this level. This is something that I've brought up many, many times before. Because it's got some historical significance and some chart level significance. So, if we do see a drift lower here, I wouldn't expect it to extend very far because we're currently trading at $5.03. So this would mean, roughly a downside of about 13 cents. Okay, so all of that said, we do need to remember the fact that prices are not moving today, and it's because of the 4th of July holiday. Markets are closed today. And generally, when you see this type of event, especially when it's on a Thursday, because people take out their orders earlier in the week, and then they maybe don't come back to the market on Friday. And they might kind of just wait until Monday to put new orders into the market. It's fairly common. It happens a lot with holidays that fall on a Thursday. So, what we're seeing here currently is that it would be considered to be a holiday thinned trading condition. There's less liquidity in the market, which really just means there are fewer open orders in the market. There's less money in the market, fewer buy orders, fewer sell orders. So ultimately, what that means is that it's much easier to push around market prices. It takes much less money to move share price valuations. So it does make me, I don't want to say concerned, because the similar events can occur on the top side too. But, given this holiday thin liquidity condition, it wouldn't take much to push prices below the support level. We're only 13 cents away here. We could absolutely see a price gap lower, and then we could jump right over this important support level. If that were to occur, then any buy orders that are parked here wouldn't be triggered, and they wouldn't be supporting market prices. So, I'm not saying this is going to happen. I don't predict the future. I don't claim to have a crystal ball like some people do. But I'm just saying that this is an event that could occur here. Um, you know, uh, because due to the current condition of the market, we're just not seeing as many open orders. So overall, we come back on Friday. There's the non-farm payrolls report that's released before the market opens, and this is likely to set the trading tone for the day. Whatever the outcome is there, I'm likely to come back here and be talking about this non-farm payrolls number. I'm sure nobody really cares about it, but the reason I bring it up is because it's the most market-moving piece of economic information, and it generally sets the tone for trading for that day. So when we combine that with these holiday thin trading conditions, it really does set the stage for potential volatility in both directions. I mean, it could just as easily happen to the top side. I'm just kind of focusing on the negative side here because I'm trying to prepare people, for the worst, and prepare for the worst, hope for the best. What is it that people say? So, I'm just saying this is an event that could occur to the downside, but it could just as easily occur to the top side. And then if that does happen, it would not take much for market prices to break through this upside resistance level, which is currently found at 536. So, this could just as easily happen in both directions. So I don't want to, get people too concerned here or anything like that. If we did break above this resistance level, we would be looking at, definitely a further upside retracement here, because this prior downtrend is already broken. I mean, this is something we've already discussed here. So I'm not going to go over that again, but the prior downtrend is broken, and we do have a positive reading in the relative strength index momentum indicator. So we're currently pointing toward the top side here. And if we can get a little bit of extra help here with maybe this non-farm payrolls number, maybe the market has a strong day, maybe there's a thin trading condition in the market, low liquidity levels, and all of this could send prices much higher during the Friday trading session. So we will have to check back and see how all of that plays out. There will be a Friday update. So we'll see how this goes near term. Overall, the bias does remain positive. Here's the current market analysis for AMC Entertainment Holdings Incorporated, stock ticker AMC.